Okay, this is the daily money-making setups for the S&P 500 E-mini using the 1500 tick bar chart, and it's going to be using the chart. We're going to look at the setups that occurred Friday, the 25th. But before we do that, I thought we would, since it's a long weekend here and everything, I thought we'd look at the broader market just to see how the system works, the processtrading.com right edge system works with the forecasting the broader market. And as you'll see at the end of the forecast here, just as we look at it just quickly, we'll see that the essence of it boils down to actually still trust the system on the daily basis. So we know the S&P E-mini is basically the futures, or you could call it the underlying, for the S&P 500. And then we also know that the S&P 500 has a proxy in the ETFs, which is the SSO. And that's what we're going to look at here. We're going to look at the SSO, which is the S&P 500, on the daily chart here. When we look at the chart, we see the process trading VWAP right here. As it came here, it was yellow, then gray, then yellow, then gray. And we can see, well, here it's a little bit further gray, and we know that the yellow stands for uptrend and the gray is for downtrend. And we can see that price kind of just whipsawing around the process trading VWAP, which both serves as a trend trading mechanism, and it also serves as a support and resistance line, plus it serves as a regression to the mean line. And again, where does it regress to the mean from? Well, it regresses to the mean the same way it works in the intraday trading. It regresses from the contrarian bands. And that's these two bands right here, this band and this band. And we can see price goes up to the contrarian band and it regresses to the support line. Then if it goes down below it, it goes to the where you would make contrarian type trades, because this would have been a downtrend and your contrarian trade would be the upside. And it regresses back to the PT support line or VWAP line, which again would be the regression to the mean line as well. So we have these indicators up here in the top half of our screen, and then the discretionary indicators are below. That's these three indicators right here, the INTERG, which stands for internal energy. And of course it has the green bar showing positive energy or demand. It has the gray bar showing weakness coming in, and then it has the red bars showing supply. It also has the red and yellow markers showing points of negative or positive energy coming in to the markets. Then more uniquely with the daily, you can have the histogram reading where it has supply coming in here and it has weakness, because you see that's there, and in fact the trend does show as being down with the gray VWAP, but you have some positiveness coming into the market right here, even though it is generally in a down trend. You see positive coming in right here, even in the period of weakness, and that is right here. But then, of course, the weakness resumes and takes over. But you also see, even though it's weakness because of the supply, the red histogram bars, you also see areas of weakness. Here's a completely gray bar, which shows that there's weakness showing up in the supply or the selling side. And you see weakness right here showing up here too. And this weakness finally gives over to the supply exhausting itself and actually buying coming in. But this buying is very weak because these are gray bars. They're not green. Even though they're demand bars, they're weak in nature. And we see actually a kind of a divergence here where we have then supply coming in this area. So we have the Intergy indicator. Then we have the sentiment oscillator. And we can see at each point here is the momentum line, which we know reacts quicker. And as the rule of thumb, price follows momentum, and then momentum follows volume. Now, your Intergy indicator is a better proxy for volume. So here we see price following momentum. Momentum is cutting down sharply in the oscillator from the upper bound down through the midpoint and through the lower bound. And it's also cutting down through the sentiment oscillator. So that is a very strong indication within the system. And also we see up here, we have a point of weakness with our red mark here, and also weakness with the gray bar. So if this is a proxy for volume, we see weakness coming in the volume, and we see momentum cutting down, and then we see price coming down like that. So if we just bounce along here, we see momentum cutting through the sentiment oscillator. Here we see it cutting up through it, but in fact the sentiment oscillator is actually coming down still. So it shows that some of the conviction is coming out of it. Now, when we read the market as a whole, we look at the sentiment line, or again, that's a proxy for conviction. We see it gets down to the midline, but it never breaks below that. So there's still strong sentiment. And we look over here at this, and we see that the sentiment is sloping up, and also the momentum is above it. So you know how you have those two faces where you can see an old lady or a young lady, depending on your personal mindset? Well, that's the same thing with the market here too. You have momentum that is above the upper bound. Now you can see here it doesn't stay there for long, except when it's in a large uptrend, and you can see how long the momentum stayed above the upper bound here. Momentum was just very strong to the upside, and the system would have showed you how to stay in that with the timing alert dots and everything, but you see it's strong to the upside. Over here, because it's whipsawing around the support and resistance line, we see that momentum kind of goes above it and then reacts to that, comes down, it goes above it and reacts. And so now it's extended a little bit here, and it's above the upper bound. So the question is this a place where momentum is going to cut down through the sentiment line and the upper bound of the oscillator? Well, there's an argument for that, because the Intergy, or the internal energy to it, had a weak point here with the red point here and the gray bar, so weakness is coming in. But relatively, when we look at this gray bar here, it's about the same height as these demand bars here. So relatively, that's not a strong weakness, but weakness itself will kind of step down, and it is kind of decreasing in size. So there is some argument that this momentum is going to cross the sentiment and go downward, and that's a sure sign that price is going to fall for at least a short term. And when you speak of the short term, then you have the short term indicator as your last discretionary indicator with a pullback line in the middle. And you can see how here with your short-term trend line, it comes up to the top of the oscillator and hits the pullback line and goes back up. And if it goes through that pullback line, then it's likely to hit it and bounce off it and continue up. And that's what happened right here. It went above it and it came back down to it, but it only moved back down to the pullback line, and then of course proceeded to go back up. So if we're looking at the market as a whole right now, we would say that there is some weakness in it right here, and we can see by our classical technical analysis there's 1, 2, 3, 4, 5, at least 6 dojis in those daily sessions right there. So there's a struggle going on between the bulls and the bears, and it's going to break out of it one way or another. Right now, we would be inclined to say that it might break down to the short side temporarily, and we have the short-term trend here below the pullback line, maybe even going to descend below the lower bound of the oscillator. So we have some potential direction for the general market itself, but really what this tells us is that use the system on the daily basis, because it is very accurate on reading the daily trends, and that's what we'll get into right now. So let me get over there. So this is our daily setup from the 25th, and we'll look at our opportunities as they occurred over here. The reading of the market actually started before the market was open, right up here. And this is the 1500 tick bar chart for the S&P Mini. And then here's our broader market oscillator, and here's our volume bar that kind of tells us again, discretionary information. So as we look as the market started here, this is around the 7:30 time period, and we see that the PTVWAP had just gone gray right here. And we can actually go a little before that. We can see that here was like the beginning of the day right here. This was the beginning of the day, and as the day progressed over here, we can see that the price was going up, but then the PTVI turned gray right there, which says it's in a downtrend. Well, that happened to coincide with the sentiment oscillator, not unusually, cutting down through the sentiment line. So, and we see conviction here just sloping down towards the bottom. So there's nothing in here really that says that we're going to play it here. You could take that discretionary trade, but this is pre-market open, and so we're not going to analyze that right now, even though the system does work on the pre-market hours. But the things to take note of here is right before the open, we had a trend dot here and a trend dot here in the Intergy. Now, this white trend dot is a trend that says an uptrend is potential. And here, a blue dot says a downtrend is potential. And we actually see that short-term uptrend here in that short-term downtrend here, but we have to know when and how to take that. Well, this is a stronger signal for us because we we had a trend dot here and a trend dot here. And then as the market opens, we have another trend dot down here on the sentiment oscillator right when momentum cuts up through the lower bound and through the sentiment line, and we have several more trending dots right here. So because the PT VWAP is gray, we can only trade with trend trades to the short side. But here we're looking to go long. So if we're looking to go long here, there's only two types of long we can make. We can either make a discretionary trade or a contrarian trade. Now in this case, a contrarian trade you can only take when price hits the contrarian line, and then you have a timing alert dot to it. Well, price did not hit. It didn't quite hit the contrarian line here. So this is going to be a discretionary trade based off of supply diminishing, the trend alert dots, and the gray bar of weakness in supply, as well as the other trend alert dot and momentum cutting up through the bottom of the sentiment oscillator and through the sentiment line, showing conviction is going to go the other way. And the way that we're going to take this discretionary trade is, in this case, because it's so close to the contrarian band, we're going to use our contrarian rules. And our contrarian rules say that we can trade a counter trend trade when we have the timing alert dot and price is supposed to touch the contrarian band. In this case it didn't, but we're still applying those rules. So we have the timing alert dot, and we look to just the previous bar, and we look to the low of it, which is 1625. You place your stop a half a point below the low of that previous bar to the timing alert dot. So in this case, it would be 1575 would be our stop, half a point below the low. Well, when we get into the trade, and you get into it immediately as soon as you can, placing your stop according to the rules I just went over, and we can see that the low here is 1625. So let's say you got in at 1650 and you went to here, and the low here is 1650. It never gets anywhere near 1575, and you go up to here where you have another timing alert dot, but up to here you are at the high of 2350, and if you got in at 16, you could have got out at 20 with 4 points. So chances are you would have been out before this point here. But here's our next trade. Because the process trading VWAP is gray, we can trade to the downside or the short side anywhere there's a timing alert dot above the price bars. And here's where we see that timing alert dot right there. So our trade management tells us we look to the low of that bar, which is 21, and we place our entry order 2 points away at 19 then. So that's where we want to get in. We want to get in at 19, and to take 1 point would mean we'd have to get down to 18. Well, if we get in at 19, if you went down to here, you're at 1650. So you only had to get to 18, but if you went to 6 or 17, that would be 2 points right there. And so that is an area that you could have got 2 more points. And you would have got out somewhere in here. So you could have went down to 1650, but you probably would have given a half a point back or something and got out at 17. So that's good for 2 points. So that's like 6 points for the day so far. There, you cannot take this timing alert dot because the process trading VWAP is gray. So I'm just going to move along, and all your next trades are going to be discretionary trades because price is just, again, whipsawing as it has been for the few days, as I pointed out on the daily chart, where it's just been doji after doji and price whipping around the support line here. So you don't have any trend trades essentially because no trend is occurring and no trend is in progress. So the way that we're going to take our next trade here is we actually are going to take a contrarian trade, but we're going to do it with our broader market oscillator. Here we see our broader market oscillator, and we go right over to this point. You can't see the upper bound to it, but this green line is the lower bound to it, and we look at the time. That time is 1446. When we look at our indicators over here, and we look at 1446, it's right here. So this is where we're going to take a low-risk trade because the broader market has reached the lower bound, the oversold bound of the oscillator. Then it will move up as it did right here, and we can have a 1 or 2.5 point stop, something like that, even though we got in here on the strength of this broader market oscillator hitting the lower bound, the oversold bound, and most of the time it'll bounce off of that and go back up. So we have a high probability trade here, and in this case we're not trading off our discretionary indicators. We're trading off of the broader market indicator here. As well, our timing alert dot told us right at this point in here, this white color-coded volume bar says that that's an end of trend or an end of down. So that end of down is coinciding with the broader market here saying, oh, okay, that's the end of the down movement and now it's going to go up. And so we take our trade right there. So on that timing alert dot, even if we get in at the high of this, which is 1525, that goes up to, well, it continues on up, but you'd probably get out somewhere around here. And the high of that is 2025. So that is like another 5 points. So call it 4 or 5 points. But that would be our next trade, and that would be on the strength of the broader market. So I thought I would just show that a little bit because most of the time I don't include our broader market oscillator in our volume bars, which also help in making decisions over here. Although clearly you don't need any other indicators except the ones that are on the primary screen. So that's it for the broader market and for the setups that occurred Friday. And if you want to see more of these setups as they occur each day, where you could have taken them and see the accuracy of the system, just subscribe to this and they should come to you automatically. Or look at the processtrading.com website in the right edge trading system, because you can see all these trades we're taking right at the right edge when the right edge was occurring. That's the essence of it, that they give you the confidence in the clarity and the accuracy to take those trades, as well as they have the trade management to tell you exactly how to set your risk and how to enter and exit them. So At any rate, that's it for this daily setup video, and then I will see you on the next one. Hope you have a great holiday weekend, and we'll catch you on the next market video.